Now, PIMCO's call on Europe and the UK was much more specific. While the near term looks bad and inflation is a risk, all that makes euro debt more enticing. Maitri Sitharaman's in London with more. Maitri?
Scarlett, Andrew Bowles, the PIMCO managing director responsible for that note that you were just mentioning, says that PIMCO sees the Eurozone as a more attractive place to take a longer position, given the bond fund's expectation of weaker growth and, of course, what they cite as the ECB's persistent focus on inflation. Now, he's highlighting that the attraction is the ECB's less aggressive policy responses than elsewhere in the world. In the UK, like the US, Bowles says that the Bank of England will actually be on hold at very low interest rates for longer than what is already priced in by this market. And you're seeing pretty similar trends when you compare the longer-term bonds here in the UK. Yields, of course, down today, but they've been on a tear lately, just like in the US. Equity markets not far behind either. We're seeing gains across the board this morning. More green shoot effects being seen here. Technology pulling the markets higher. That, of course, coming from Texas Instrument increasing its second quarter forecast. Stocks like Nokia responding positively. The other big gainers, of course, are the other indicators of better things to come for the economy. That's obviously commodity producers. Take a look at prices. It's kind of obvious the gains will pass on to producers. You've got copper up for the first time in 3 days. Aluminum is up. So is tin. Two big movers, and one big mover I wanted to really make a mention of here is Porsche. It's up after confirming that it's in talks with Qatar on an investment. Again, more on that just a little bit later.